Hello out there, my dividend growth stock investing pals. It is Colby the DGI Crab, and man, oh man, here we go again. It is election season. Got a big choice to make as Americans here coming up. We've got a couple of candidates here to be president. And listen, this is not a political show, okay? This is about investing, about making passive income that we can build up over the long haul and retire comfortably off of and not have to worry about dividend cuts forcing us back into the workforce. Now, there's a lot of impact that a president could make on the stock market, but a lot of the times I do think that that gets overblown personally. Presidents certainly have the ability to alter the economy by policy decisions that might be good or bad for a specific sector, but should that matter to us as dividend growth stock investors, and will my strategy change depending on whether Vice President Kamala Harris wins or if former President Donald Trump wins? So I found an interesting article from ABC News that I thought that we would go through here together, kind of talk through the implications of what either of these two being elected would potentially do in the market. Now, as always, this is not financial advice. You should always do your own due diligence before you invest. As far as who you're voting for, don't even leave it in the comments. All right, I don't even want to get into that. If you're voting for Harris, I love you. If you're voting for Trump, I love you. If you're not voting, I'm kind of annoyed with you. That's about as political as I'll get. I think that all Americans have a civic duty to go and vote, and who you're voting for is totally your business, and everyone has their own reasons for liking a candidate. I'm not going to go into that one way or the other. You're not going to know who I'm going to vote for because I'm just not going to tell you, because I don't want that to impact how you view me as an investor, because it really shouldn't matter. But should this matter for us in our portfolios? So this is by Max Zahn. I want to give credit where credit's due here. Max from ABC News. What would a Kamala Harris or Donald Trump victory mean for the stock market? So he starts out, the stock market has climbed over the course of the presidential campaign, raising questions about whether the rally will continue depending on which candidate wins. The S&P 500 soared more than 20% this year, repeating a feat that the index achieved in 2023. So, hey, we're having a hard time finding undervalued dividend stocks right now, right? There's only a few of them amongst the 60 this channel focuses on that have been in that green buyable metric where it's yielding 30% or more above the 4-year average. Overwhelming majority of those 60 stocks aren't even close to that. A lot of them are yielding well under that. The Nasdaq's jumped 23% this year, while the Dow Jones Industrial Average has increased by 14%. Over the full span of the next administration, the market will likely move higher, whether the nation elects Harris or Trump. Well, hey, that's good news, right? However, they added each candidate's policies could favor different types of stocks while posing unique risks. Here's what to know. What a Trump presidency means for the stock market. Now, Trump has vowed to extend the corporate tax cut signed into law during the first term when they began to phase out in 2025. If approved by Congress and signed into law, the tax cuts would accompany an anticipated deregulatory agenda taken up by the federal agency within the Trump administration. Less regulation, a lot of the times, means greater profits. That combination of low corporate tax and loose regulation would likely bolster the profits, propel the stock markets higher. Taxes do have consequences. Peter Barici, a professor emeritus at the University of Maryland School of Business, told ABC News, with the Trump administration, it will be like a cork coming out. Trump policies would favor sectors such as oil and gas, as well as artificial intelligence. Meanwhile, firms focused on renewable energy could suffer if Trump undermines financial incentives enacted under Biden, some experts said. The Inflation Reduction Act was a big deal for solar and electric vehicle stocks. Callie Cox, chief market strategist at Ritz-Holt Wealth Management, told ABC News. Who knows what will happen if that policy is walked back? Trump Media and Technology Group, the Trump-owned parent company of social media platform Truth Social, could rise in value if Trump takes office. Shares of the company have more than doubled in price over the past month as the former president has improved his standing in some polls. However, while Trump's policy proposals could boost the stock market, they may also threaten market performance, some experts said. On the campaign trail, Trump has promised tariffs as high as 20% on all imported goods. Economists widely expect that such a policy would raise consumer prices. Trump has also voiced plans to deport millions of undocumented immigrants, which some economists say could cause a labor shortage. Last month, Trump suggested invoking the military to tamp down on what he described as the enemy from within. If he starts using military domestically and imposes a 20% tariff and becomes draconian and an anti-democratic figure, it will weigh terribly on the stock market, Morici said. On the other hand, what would a Harris presidency mean for the stock market? Stock prices would likely increase under Harris as they have under President Joe Biden, but a potential hike in corporate taxes and robust regulatory enforcement could limit the gains, some experts said. Corporations currently face a federal tax rate of 21%, which Harris aims to raise to 28%. Such a hike could hinder corporate profits and take some fuel out of the stock market. Rina Agarwal, a professor of finance and director of the Georgetown Soros Center for Financial Markets and Policy, told ABC News. But she said it remains unclear whether the policy will become law. I don't think this can happen that easily, Agarwal said. It takes a long time. Agarwal pointed to renewable technology as a sector that would benefit from policies under the Harris administration. When asked about how the stock market would fare under Harris, Cox said the outcome would come down to interest rates and earnings. Kind of a bland statement there, if you ask me. I think that would be the case no matter who the president is. Interest rate and earnings certainly affect the market one way or the other. The Federal Reserve typically raises interest rates in an effort to cool the economy and rein in inflation, but the policy often places downward pressure on stock prices. The Harris campaign has put forward proposals to slow price increases for everything from groceries to prescription drugs to homes. Those plans include a federal ban on price gouging and a focus on market concentration that the Biden administration says triggers high costs for consumers. In the end, long-term stock market performance will likely depend on economic forces over which Harris or any president will exert limited control, Cox added. I don't think Kamala Harris could enact changes that have long-term effects on the stock market, Cox said. If you're a long-term investor, politics do not matter for your portfolio. And I think out of everything on here, there's nothing overly controversial within this article. But I believe that last sentence, that last quote, is the most important refrain to take away from this. If you're a long-term investor, politics do not matter for your portfolio. Now, I think that's particularly true for dividend growth stock investors. If you are an investor who is a VOO and chill, right? VOO, S&P 500, or a total stock market type of investor, we're just dollar cost averaging into the S&P 500 or into the total stock market. You've got a long-term time horizon. There's going to be, hot stock market years, bad stock market years, hot quarters, cold quarters, everything in between. And so long as you're dollar cost averaging in and you have a very long time horizon, none of this stuff is really going to matter, especially if you're looking at 20, 25, 30 years down the line. For a dividend growth stock investor, because I am not concerned with stock price or with overall portfolio value. Now, there's a thing called NAV erosion, right? I don't want to see my portfolio value decreasing because I'm investing in a lot of trash that's not maintaining its share price value and doing dividend cuts. As you may know by now, we're focusing on high quality blue chip stocks, blue chip dividend focused ETFs that have a nice, most cases, 45-degree angle up overall on share price as well as dividends. So if there's a bad stock market year where our portfolios get slashed by a third, or in a really bad year and your portfolios get cut in half at some points in time, if you are primarily focused on the dividend payout number and whether or not that is going up or down, that's going to be where that peace of mind comes from for me. Now, is it fair to say that we could speculate that for the stocks in the DGI Crab portfolio, right? Things like the oil stocks, let's say Exxon, Chevron, maybe those fare better if Donald Trump is elected. Whereas perhaps maybe some of the more tech-related stocks like ADI or even Microsoft, for example, might do better under a Harris administration. All of that, generally speaking, is going to be speculation one way or the other, and it might even end up being the exact opposite because you don't know for sure what a president or what a candidate's going to do until they're actually in office. Presidents generally tend to do a few things that pleasantly surprise, a few things that disappoint or don't come through on certain campaign promises. And no matter what those are, about half the country is going to love it and the other half is going to hate it. So all of that to say, whether it's Trump, whether it's Harris, my investing strategy is not going to change. The only thing that may be different is just there might be certain stocks within the portfolio might present better value or better buying opportunities depending on who that is and what policies they end up getting passed through. So, big reason why I love this particular style of investing is I'm not overly concerned about the macros. What's going on in the United States government or any of that business. I am just looking for good values when they present themselves for the new money that's going in the portfolio, and then just sitting and holding and reinvesting dividends on any of the stocks that look to be overpriced. All while that's going on, still continuing to dollar cost average into a few select ETFs that I think are appropriate for my age range and time horizon. So I'm automatically getting broad diversification. So if I am just continuously hammering one stock again and again and again, week in and week out, man, I'm building up a hell of a Hershey position this year, I've just got to say. But if that position, I'm not worried particularly about how big it's going to be in terms of overall portfolio diversification because I've got my ETFs. So when the time comes that Hershey is expensive again and not undervalued, that position is going to cause the overall value of my portfolio to really skyrocket. And then in the meantime, some of the stuff that I haven't been touching right now because it's been really overpriced, maybe here in a year or two, some of those are going to just crash down because they have a bad quarter. We all have seen recently what happened with Genuine Parts Company. GPC took a 20% stock price hit the other day. So you just have to be, focused on a handful of different stocks appropriate for your age. And when one of them becomes cheap, you pounce. And the ones that are really expensive, even though you might really want to buy them, you just sit back and you're patient and you wait for your opportunity because you're going to get the exposure to them one way or the other with the ETFs. So don't have FOMO, don't have fear of missing out, and don't let politics get in the way of your investing or make you afraid to invest your money or make you overly zealous to invest too much because you're trying to time everything based on politics. Don't get caught up in all of that stuff, you guys. Just have your plan. Shut off all of the outward noise. Vote for whoever you like. We're all Americans. And if you are a viewer of this channel, I hope that you are in my boat where we're trying to add to that passive income so we can have that financial independence, plenty of options in life for what we want to do with our careers, or how much more or less we want to work, or even what job that we want to take. And just know that we're going to have a continuous stream of that passive income coming through because we did it the right way and did not cut corners. That's about all I have to say on this one, you guys. So last thing I'll leave you with here on the politics side, just get out there and vote. And please, let's not get into any political debates in the comments section. Let's just focus on building up that passive income. We're all Americans after all. My name is Colby, the DGI Crab. You can email me your questions at dgicrab@yahoo.com. Thank you so much for tuning in, and I will see you on the next one.